everyone, Sami Abusaad here from T3 Live. I hope you are doing well. Today's video is done based on popular demand. I am going to share with you how to use volume in your trading and the art of reading volume. Volume is probably by far the most commonly used indicator in all of technical analysis, and regardless of the methodology that everyone trades. So why not learn to use it objectively and professionally? And today, I'm going to show you how to do that. So let's go ahead and get started. We teach volume in Trading the Pristine Method class. And what we say is, if a pattern happens to form with above average volume, and you're going to learn what that means in a minute, that setup gets 10 extra points. We have a grading or a scoring system, and that setup gets 10 extra points because volume is pretty important. So volume is one of the most valuable keys to predicting price reversals. Mastering the art of volume, price-volume relationships will allow you to pick tops and bottoms like crazy. The truly astute trader can trade successfully by relying exclusively on price and volume. Of course, price tells us what's happening with the stock, whether it's going up, down, or sideways. Volume tells us the level of interest, how much interest there is in that stock. It is said that volume is also the footprints of money. Of course, it shows you how much the stock is being bought, sold, right? So it's definitely the footprint of money. There are three types of volume to be aware of. Novice, which typically ends the current move, especially when it's extended. Pro, which ignites a brand new move. And then the third, which is rare to find, is called continuation, which typically continues or leads to the continuation of the most recent move. Now, the number one volume rule is if you get above average volume after a strong up or down move, that indicates that a short-term reversal is close at hand. Okay, so getting a volume spike or above average volume after multiple bars up or down leads to a price reversal. We'll show you examples of all of that. Now, when the stock is getting bought, so you have multiple bars up, right? And then you get a spike in volume, that indicates that the buyers, the last batch of buyers, have finally committed to the stock. So, in other words, it's running out of buying. Okay, it's running out of demand. And that's why the stock drops, not because it's a weak stock necessarily, it's because it just ran out of demand. The scenarios below become incredibly potent reversals if they occur at or near potential turning areas, such as the downward trend lines, major or minor price resistance, or declining moving averages. If any of the above advances or the below advances is nearly a first pullback after a sharp breakdown or a counter rally in a strong downtrend, it will possess a more compelling reason to decline. What that means is if you get a breakdown and the stock rallies multiple bars up and then you get a spike in volume on the last bar, like so, that is an extremely high odds play. That should be an extremely high odds short. Okay? The key to trading accuracy is finding points at which numerous concepts converge. And that's the absolute truth. The key to trading accuracy is finding points at which numerous concepts converge. So this is called novice buy volume. The novice people are finally buying the stock. Novice sell volume is the opposite, when the stock is down a lot and gets a spike in volume. That indicates that sellers have finally panicked out of the stock. When there's blood in the streets, they say, go long, right? Buy, it's time to buy. Well, that's what that means actually. When sellers finally panic out of their positions, there's no more selling. So it's time to actually go long. So that's called novice sell volume, as the novice traders finally sell their positions. Pro volume is when it's in a brand new move, when the volume basically ignites a brand new move. So the below scenarios become incredibly potent reversals if they occur at or near potential turning areas, as we discussed. So I'm not going to read that. Remember, pro volume ignites a brand new move or direction in a stock, especially when it happens. It's easiest to see it when it happens on a breakout and you get that spike in volume, right? If you get the spike in volume on a breakout, that's indicative that a lot of people actually committed to the stock. Okay, so that's pro volume. Continuation volume happens when we have a base and the stock, and while the stock is basing, volume tapers off. Okay, while the stock is basing, volume actually drops, and it is indicative that selling pressure basically decreased, or that there's no more selling in the stock. And if it based at the highs, like in the first example at the top, that's bullish, and there's no more selling. It's probably ready to go higher, right? So let's read. These two scenarios show volume which ignites a brand new move when it breaks out of the base. That's the spike in volume. That's pro volume. Or when it breaks under the base, that's pro volume also. As you know, certain types of volume end current moves, that's when it's novice. Other types of volume ignite a brand new move, and that's pro. And yet another continues the most recent move, and that is called continuation volume. Okay, so the T3 trained trader needs to know how to determine the difference between these three types. All right. We're going to look at some charts and show you the different types of volume. And I'll switch on the live charts, and I'll show you also maybe today's trades, today's charts, and show you volume, all kinds of volume, the three types from today's charts. When a stock is down a lot and gets a spike in volume, that, my friends, is called novice sell volume, which means novices are finally getting out of their position, which means the stock should be ready to bounce back up. When the stock is basing and then gets a spike in volume on the breakout, like so here, that means professionals are committing to the stock and it should go higher. So a pickup in volume after a multi-bar decline or rally will tend to end the current move, if only temporarily. Sometimes it's only temporarily, and then the stock continues lower. But usually it means it's the bottom, at least for now. I'll show you what I mean in just a few minutes. An increase in volume on a T3 breakout right here confirms the increase in demand during the breakout, which means it confirms that institutional money, because you and I don't trade this kind of size, right? That's not day traders, that's mostly institutional traders. It means they're committing to the stock. If they're committing to the stock, it means the breakout shouldn't fail, right? They're not gonna buy it and then immediately sell it. So they're committed to a large move, which means the breakout should work and then should probably continue higher. The stock should probably continue higher. Okay. Here's an example of novice volume, novice sell volume. Here's an example of pro volume. So on the way down, the stock down a lot, got the spike in volume, that's novice. And then here, gapped up a little bit, and then got the spike in volume, that's pro. Led to this move up. On the way down, it put an end to the move down, that spike in volume, okay? All right. So a pickup in volume after multi-bar decline, as we said, leads to the end of the move, and the volume climax indicates that most of the sellers have already rid themselves of the stock, which means the stock should go higher. Likewise here, of course, right, novice volume on the last bar there, you can say pro volume on the way up. It wasn't impressive volume by any means, and then the same here, of course, right? Okay. This is called a climactic buy setup. That's what I actually do. That's what I trade, climactics, right? It's not my It's one of the three key strategies that I trade. One of the three key strategies. You have to be very picky with it, especially when it's a low volatility environment like right now. We're kind of in a low volatility environment. Another chart, another example of volume putting an end to the move, and then here on a retest, igniting volume, starting this big move up where the stock actually more than doubled. Okay? So volume, novice volume on the way down, and then pro volume to start the move up. All right, very good. When you have a novice gap, this was a novice gap up this day, just at the beginning of the year. When you have a novice gap up and the stock is up a lot and it gets a spike in volume, that means this move is over. Stock retests over here. Notice the flat 20. When the stock tries to break out while you have a flat 20, it usually leads to a failure. But in this case, it also was retesting an area where the buyers the stock has already ran out of buying. So it failed, and then notice right here, started basing under the 20 MA. So where do you think the stock was headed from here? Up or down? Probably down. Notice how the moving average, the 20 MA, held the stock in check, so probably lower. Does that make sense? So this means, again, that the buyers have already committed. If they've already committed, it means it already ran out of demand. The stock, even though it's bullish, is probably not going to go higher. Okay, been dying to switch on the real live chart so I can show you. I don't really know if I took any climbos today, but what I wanted to show you was actually three types of. Let me just take a look at my P&L. So I had a pretty good day today, but I also had a lot of trades. So I should have. So I wanted to show you the CLDR. I also wanted to show you the NNBR because they show the kind of volume that I wanted you to, or they show clearly pro and continuation volume. And then from here, PIR was a climb also. So let me show you that, PIR, okay? We'll start with the climactic volume or novice volume. Now, let me ask you this. Was the PIR today weak or strong? Weak or strong? I'm sorry to say, but I'd be an idiot if I said strong, okay? That was weak. Now, why was it a good long opportunity down at the bottom? Why was it actually a good long opportunity? It didn't make a ton of money, but it made $750 almost. Why was it a good long opportunity? Because it ran out of sellers, not because it was a strong stock. Most of the time, I want to play strong stocks long, but sometimes I want to play weak stocks long when they run out of selling. See this? Look at the volume. As the stock dropped, the volume increased. So that's pro-igniting volume at the beginning. That's totally novice climactic volume at the end. And that put an end to the move down. And then it went higher. And then, tell you the truth, I didn't hold to 78. I wish I did. But I got out here. So I only captured from the bottom to here, okay? And it continued higher. So that's climactic volume. Let me show you pro volume. And I'm just trying to remember. The CLDR I know had pro volume, but I don't think it had the best kind of volume. Let's take a look at these two examples just to see, because those are the two big trades. SFS was a tier 1 professional gap today. I mean, just a tier 1 picture perfect A-rated gap today. It dropped at the open, and then it never really dropped again, unfortunately. Otherwise, I would have traded again in the afternoon. I had a call on it, another call. I had a call in the morning and then another call in the afternoon, but it never triggered. So short right here. I'm going to be doing it tomorrow if it triggers. Just FYI. Short right here. Now, check this out. You see how quiet the volume is? That's good. When I see that the stock is weak and in basis, and I'm looking to short it, and I see quiet volume like this, that's perfect. That means the stock should continue to the downside. So this is continuation volume. Now, the best type of continuation volume is when you have volume tapering off, like it's just decreasing. And that's kind of the case here. It decreased, not, it was mostly quiet the whole time. The best kind of volume is when the volume is actually tapering off. So it starts strong and then gets weaker and weaker. So that's kind of continuation volume, okay? Now, CLDR, which was the best trade, because I took three plays on it. The initial trade this morning as a gap trade while I was on the mic, and then another short on a sell setup under 44 by 60. So this should be 1244 by 1260, beautiful sell setup. And then another breakdown under 25, which was the base breakdown. No. It was right here, a base breakdown. It should be under 25. Okay, but that's not what I wanted to talk about. I wasn't going to review the trade. What I wanted to show you was volume, basically. So check this out. Maybe let's see on the 15. So when the stock breaks down, not sure which time frame that shows it best. When the stock breaks down here, that's pretty good volume, right? That's pro volume. You can say that's pro volume. Stock basis. What kind of volume did we get? Volume that was tapering off. That's continuation volume, which is indicative that the stock should continue lower. Okay? And then when it breaks down again, let's see if we get a spike in volume. And we don't really get much of a spike. So that's why I wasn't sure which time frame to show you. We got a spike at the end, but that's because it was the end of the day. So not the absolute best example I picked here. But look, when the stock is basing, volume declining. That means it should continue lower. When it broke down, it broke down on nice healthy volume. That's pro volume. And then while it based again this afternoon, this was not continuation volume. It just was quiet volume. Volume was not tapering off like it was here. So that's just quiet volume, which is good. If you get low volume while the stock is bearish and basing, it means it should continue down. All right. Vice versa if you're playing long. Now, if we look at the N and BR, this one unfortunately I was talking about, and as soon as I mentioned it, it went. So I didn't get it. But that's pretty good. Look at the volume while the stock was basing, and look at the volume when it broke down. Pro-igniting volume. Does that make sense? Beautiful. And led to a nice big drop. Okay? So those are some examples from today that I wanted to show you. Notice the SFS on the daily chart. That's just so beautiful. Under support, under the 200. When a stock gaps under the 200, almost always goes lower, even if the gap is not good. But in this case, it was a terrific gap because it gapped under 3 green bars in a row, meaning the traders in the last 3 days have been buying it, not selling it, and today they got trapped. Right? They got trapped. And then it gapped under support, under the double bottom, under the 200. Oh my God. This was my first trade today at the open on the mic with the room. So this was played in the strategic day trader room. It wasn't the biggest trade, but the CLDR, it's because I played it 3 times. That's why it was the biggest CLDR today. Okay, let's take a look at. So today is the 14th. I already took a picture of my P&L. I take a picture every day, unless I forget. But I take a picture every day. This is yesterday. A lot of trades. From here, I would like to show you the CN maybe, SIEN, which was my biggest trade. But let me switch on, go back to the charts here real quick. Here we go. So SIEN, just want to show you this because it was just a beauty. Look at this, guys. Weak stock. When it was basing, what kind of, did we get a huge volume? No. Quiet volume. What is that indicative of? Lower still. Does that make sense? If you get quiet volume while the stock is basing, it means the trend should continue. In this case, it's a downtrend. So that's a short. We got a spike in volume here. That's no problem. You know why? Because it happened on the green bar, meaning actually idiots bought it. Traders bought it. So now they're going to be trapped when it breaks under. So this was also played and called in the strategic day trader room. And then right at the end of the day, at 16 is where I covered. So that was nice. We ran out of time, unfortunately. Ran out of time, but this was nice. Yesterday, it was the best trade. It was nice because I did an add and reduce. So this green bar allowed me to add more shares under the green bar's low and lower the stop to 61. So that's why it was actually particularly nice. Now let me show you from yesterday's PNL also a losing trade, and it was the Roku. Roku went climactic, but this is an example of a stock that goes climactic and the volume doesn't really end the move. That, my friends, is definitely climactic novice volume. Definitely. It should lead to a bounce, except it did bounce, but not a whole lot. And I ended up taking a stop on it. Does that make sense? So this was also played in the strategic day trader room. I called it, played it. It was up nicely initially because you see this little blip, that's $1. I mean, this was up good amount of money. But then it didn't get to the target, and it ended up losing money. So again, novice sell volume in this example, but it didn't really lead to a bottom. It led to a temporary bottom, and the stock continued lower. Okay? That happens sometimes. PIR today, that was the bottom, and it never looked back, basically. It never made a new low. But Roku yesterday was, it lost money. I don't know if there's anything else here that I want to show you. So let's go back to, actually I have a preview here, so I can just, instead of opening like this, which takes up, I can just show you the preview. So, and then the day before that, I'm just going over the whole week basically. So this is the day before, and from here, I don't really remember anything. Nothing jumps out that I recall. Most of the time, I have really good memory when it comes to which stocks had pro volume, novice volume, continuation volume. But from here, it looks like I just tried a bunch of things. Momo was a play at the open, and then after that, I probably didn't find anything great to do. So those were just scalps. The day before that, is this week? Yeah, that's Monday. Let's see. Yeah, also from here, I don't really remember anything. QHC. Anyways, I think we've talked enough about it that you should be able to. You should have gotten a good, really thorough understanding of the three types of volume and what they're used for. So again, pro volume is indicative of a brand new move that's being supported by institutional buyers or sellers if the stock is dropping. So that leads, so it ignites a move. Novice volume comes after multiple bars down usually, or multiple bars up, and it leads to the end of the move. It's indicative that the last batch of sellers, if it's to the downside, or buyers, if the stock is running up, has finally committed. And if the last batch of buyers has finally committed, it means there's no more buying or no more selling. And the stock should reverse, and then continuation volume happens in bases. And it leads to the continuation of the move that's already in place. It leads to the continuation of the move that's already in place. So those are the three types of volume. I trust you have better, more thorough understanding of volume than 99% of the traders out there. Having said that, volume is not as useful as most people make it out to be. It is mostly useful when it's a novice sell volume or when it's a novice buy volume. When basically you're trying to pick the bottom or you're trying to pick the top. But if you wait for pro volume to come in, like on the CLDR, let's just say, here, if you wait for it to come in, then you'll have missed the play. Does that make sense? This is not a great example of pro volume, but you can see the spike in volume once the stock started breaking down. If you wait for pro volume to show up, you will have missed the move. So for pro volume, you can't really wait for it, okay? Which means it's a little bit useless. Now, it's not totally useless because if I see, let me show you why it's not totally useless. If I see a stock breaking down like this one did, but even more on bigger volume, huge volume, and let's say I saw that after the fact and I see that I missed it. Well, guess what? Let's say the stock went back up and gave me a sell setup. If I see that the stock broke down on huge volume, on pro igniting volume, I'm going to be a lot more likely to take this sell setup short than if I didn't see any volume at all. So pro volume is very helpful in analyzing when you get a secondary play, a secondary setup. Because if you see that the stock got a lot of pro volume, then yeah, I'm going to be more likely to get involved in it, even if I didn't absolutely love the setup. Does that make sense? So that's what pro volume is most useful for. It's for analyzing charts after the fact. But novice volume actually comes before the stock reverses, and that's why it's most useful. Continuation volume is very useful too, but it's not that common. It's not that easy to find, and it only happens in basis. Okay? Only happens in basis. Most of the time, what you find is quiet volume, which is similar to continuation volume. Continuation volume is when the volume is actually declining while the stock is basing. Okay? Volume is declining. All right, guys. I trust again you totally understand how to use volume in your trading. There are 3 different types. I know that traders say, well, like a couple of weeks ago, I was just saying how bullish this market is, and I didn't like it because I'm a bear at heart. I like to short. And somebody said, what about volume declining here while the market is rallying? You know what my answer was? Who freaking cares? Don't overanalyze volume. Just the 3 scenarios that I gave you, the 3 types. The stock or sometimes, they say, well, the stock pulled back on low volume here. You see it's low volume, it means it should go higher. Not really. Don't read too much into it. Focus mostly on novice volume because that's most useful. And then you can look at continuation volume, is fine. And then least useful is actually pro volume because it happens after the fact. It's only useful if you get a setup, a secondary setup later on. And you look at the chart and you say, wow, this chart had really good pro volume. Then you can say, okay, I'm going to take the play, right? All right, everybody. This turned out to be a lot longer. The video turned out to be a lot longer than I expected, but I sure hope you find it useful. I dropped a link to the Trading the Pristine Method class because that's where we teach you how to use volume in your trading, and that's the class that I teach. I also dropped a link to the day trading room that I run. It's called the Strategic Day Trader, the swing trading newsletter that I author in case you're a swing trader and are interested. And I also dropped a link in the description of the video to the earnings engine class in case you like to play earnings gaps. I teach you how to do that in that class. So be sure to check out the links. If you have any questions, reach out to T3 customer service. And if you found benefit in today's video, be sure to hit the like button, please. And have a wonderful evening and happy almost Friday. Take care, everybody. Have a good night.